Hello and welcome to Trading the Market Map. My name is Jody Samuels from the FX Trader's Edge, and today we're going to talk about trading the market map on the SPDR ETFs to find trends and corrections using my groundbreaking Wavy Tunnel Pro strategy to trade the market cycles. Let's begin. Please read this disclaimer. I'm going to read it with you. This presentation is for educational purposes only. Past performance does not equal future results. Please do not construe any information found here as advice or recommendation of any kind. And you can lose money trading. If you cannot afford to lose money, you should not trade. Today, we're going to start out talking about how to trade with confidence, trade and end of trend trades using a simple tool and trade plan. Actually using the Wavy Tunnel Pro setup. That's about trading the market map and understanding the cycles and getting ready for the next move for the trends and corrections. And we're going to focus on sector analysis on the SPDR ETFs using the market map. And then at the end, we're going to discuss the Elite Scanner Tool and Indicator Suite so that you can do this on your own, which is about mastering the setups all based on trading psychology and the market map. I wrote this book several years ago called The Trader's Pendulum. This is a book which talks about the three types of pendulums that traders face: the market pendulum, the emotional pendulum, and the financial pendulum. All relate to what we're covering today. The market pendulum is about reading the market map. The market moves in cycles. We have the trends and we have the corrections. The emotional pendulum is what we might experience while trading that market map. And the financial pendulum is about making money and losing money, because we need to learn how to accept our wins and our losses as well. This is the market map, and this depicts the emotional pendulum trading the market cycles. So when we start off at point 0 and we move up in 5 waves or in a trend move, which is captured by the channel lines, the dotted channel lines that you see, when we get to the end of the move, this is when the crowd, the market participants, can get a little bit optimistic and exuberant and greedy. They load up for FOMO, fear of missing out. And that's point T, the time that we should considering that maybe this is the end of the move and maybe we should be taking profits up here. And then the market starts to turn. We label this an A, and then a retracement B, and the final move down for C, where again market participants get fearful and panicked and discouraged and bail. Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. So we need to train our brain to be greedy up there at point T and be fearful at point C. And this is the market map that we are going to be focusing on today. Again, we need to take profits up at point T, and we want to be buying down at point C. So I want to show you something very interesting. This is the SPY, and this is a weekly chart. This is the market map, as you can see, and you see the purple arrow, that would be point T at the top, and then the gray arrow is when we should be buying. That's your ABC correction, the end of the move. And in between we have the wave, which are the purple lines moving up to capture the trend, and then we have the tunnel, which captures the corrections. So this is a weekly chart. Now, in October of 2022, this is when the gray arrow appeared. You can see in the little box over here, that's the purple box where the gray arrow appears. And at this point, many stocks showed up on our scanner to be buying the market, and that happened to have been the broad market low and the low for many stocks that were on our scanner, the S&P stocks we were tracking. Now I want to take you to the daily chart to show you that it appeared right over here in this section of the weekly chart. And this occurred a year later in October 2023. I showed you the weekly chart where it appeared. Same pattern, same setup. Gray arrow in this purple box. And the reason why the setup occurs on different time frames and on different markets is because the markets are fractal. And that means that the patterns repeat themselves over and over again. No matter what you're trading, you could be trading stocks, you could be trading Forex, you could be trading commodities, you could be trading cryptocurrencies. The same patterns repeat themselves. So when looking at the daily scanner in October of 2023, we noticed that there were many stocks that showed up again for buys. Again, a market cycle bottom, the bottom of a market before the liftoff. Let's talk about where we are today. So where we are today is what you might consider point T. So how are we going to find these setups? Well, the only way to find these setups is to go down to a smaller time frame. And so we did. And this is the hourly chart. Again, the purple box depicts the end of the correction on the hourly chart. You're not going to find this on the SPY, on the weekly or the daily chart because we're in a different part of the market cycle. So I just wanted to explain that to you before we started to investigate on the SPDR ETFs. So what process do I follow to find trades and have the confidence to pull the trigger and manage my trades with clarity? The first step into my system is reading the market map. That's the analysis portion. You can call it doing a top-down approach. You can call it deciding where we are in the market cycle and then deciding how to trade the market cycle on the various markets that we're following. Then once we determine where we are in the market cycle, we use the top setups, the strategy, whatever strategy you have. I happen to use the Wavy Tunnel Pro tools. That's my strategy, but you might have your own strategy to enter and exit trade. So every trade needs an entry price, a stop loss, and an exit price. Finally, the third step in my system is to use trade management to manage the trade. But the first step before that is to use optimal risk reward depending on your account size to determine the size of your position, etc. And then you manage your trade. So my system includes a three-step process to find trades and manage the trade. Just as we looked at the market map for an uptrend, we have the same opposite market map for a downtrend. And you find this in many different markets where we might be in a downtrend versus an uptrend. And how we read this market map is through the Wavy Tunnel setup. It depicts the 5 waves. So we have the awesome oscillator underneath, and when we have a peak in the awesome oscillator, we can label this a wave 3, and then the awesome comes down to the 0 line, we call that a wave 4, and then the awesome oscillator moves up with divergence. We don't make a new high, and we label that a wave 5 because the momentum is running out of steam, and at this point with the awesome oscillator divergence, we're looking for a correction, which is our ABC, and then this is the point at which we're thinking about buying again. And we want to liquidate our positions up here. So now let's do some sector analysis using the market map. Some ETF and stock examples, understanding the setups. So this is from a website called Sector Spiders. It's at the bottom of the slide here. And these are the 11 sectors that comprise the S&P 500. And they're listed here. These are the year-to-date returns, and communication services is up 9.74%. The S&P is up 3.96%. So this changes every single day. The sectors which are underperforming are consumer discretionary, energy, materials, real estate, and utilities. The sectors which are outperforming are communication services, consumer staples, financials, healthcare, industrials, and technology. We're going to look at each one of these sectors using the market map and pick one stock within them to talk about what the market map is saying. We're starting with communication services. On the left, we have the weekly chart. On the right, we have the daily chart. And this is on NinjaTrader. So we have our indicators on various platforms. NinjaTrader is one of them. We also have the scanner on NinjaTrader, and it looks really quite nice. On the left, on the weekly chart, we have a vertical line indicating the start of the year. So you can see that, yes, the Communicate XLC has moved higher. We have 4 green candles, hence it's up 9.74%. On the right, we have the daily chart, and again, the vertical line is the start of the year. So what we're seeing here is we're seeing some consolidation. Whenever the market gets stretched, we like to see it coming back at least to the filter. This is called the filter, or at least to the wave. So what we don't like to do is to buy up here or to buy up here. We like to buy into the wave. Yeah, most of the time into the wave, sometimes into the filter. I mean, this is a very steep trajectory. So at this point, I would not enter any fresh positions in communication services because for me, it is stretched. Let's look at the top holding. This is Meta, and you can see that it's really the same pattern. So again, this is the start of the year on the weekly on the left, and the market has moved up, and we're seeing the start of a correction on the right. This is a gap from the earnings release. So it gapped up quite a bit from 400 to 480, and now it's stretched. So we have to see how far it corrects before it stabilizes and trade sideways. But again, these are not places to enter fresh new long positions. Consumer discretionary is one of the underperforming ETFs, down 0.83% year to date. And these are the biggest holdings. So Amazon is the biggest, then Tesla, Home Depot, McDonald's, Lowe's, etc. Let's have a look. It's down for the year, and you can see that it's down for the year. Again, the vertical lines are the start of the year. Here we've reached a peak. We had nice divergence between this peak and this peak with the gray triangle. So nice divergence. You can see that in the awesome oscillator. And the market has backed off. So this has started to come back to reasonable levels to the wave. Again, we don't buy up here. We wait for a pullback. It's only when the market starts to go below the tunnel and starts to reverse that all bets are off for a continuation of the trend. On the right, we have the daily chart. And yes, we have the purple. It's called the semaphore up here. And the market has retraced into the wave, and it's trading sideways. If this is going to correct more, the next level will be this tunnel. Okay, so we're in a correction phase in consumer discretionary. Let's look at the biggest holding. Actually, we're looking at the second biggest holding, Tesla. Tesla seems to have pulled this ETF down. So Tesla is in a corrective phase. We can see this on the left on the weekly chart. And since the start of the year, there's nothing but trouble for Tesla. And on the right, you can see that we've been in a downtrend for Tesla on the daily chart. When the wave is below the tunnel, it means that the market is moving lower. At some point, the Tesla will find a base. I'm not sure when. It could find a base rather soon and then start to trade sideways and then move back up again. But this has definitely pulled the ETF down. Let's move on to the next one. So I hope you're beginning to see the different market cycles and how we are in different market cycles in each of these ETFs. This is XLP Consumer Staples, up 2.97 for the year. The top holdings include Procter & Gamble, Costco, Coca-Cola, PepsiCo, Walmart, etc. So let's look at the index itself. We can see that it's up for the year. Again, the vertical blue lines are the start of the year on the weekly chart on the left and the daily chart on the right. So notice what happened. The market came into the wave and then moved higher. And on the daily chart, the pattern moved into the wave and then moved higher. And notice how the wave has crossed above the tunnel, which is what we want to see in a bullish environment. We really do want to see the wave above the tunnel. at this point, the market is a little bit stretched, so we do want it to catch up with the moving averages and come back into the averages. This is the biggest holding, Procter & Gamble in the ETF, and you can see that we had a very long sideways consolidation. Every time the market came down on the weekly into the tunnel, the market bounced, and then finally it took out these market highs and continued higher into these highs. So we did make a new high, but not excessively. And we can see this on the daily, where during the sideways consolidation, we have chop around the tunnel, so the wave is chopping around the tunnel, and then finally the wave starts to separate from the tunnel, and we gapped up, and Procter & Gamble looks is doing much, much better. This is another underperforming ETF, XLE Energy. The top holdings are Exxon, Chevron, Conoco, Phillips, Schlumberger, etc. So the largest holding is 22.95% in Exxon, and then Chevron is next, 17.95%. With energy, on the left, we have the weekly chart. We're pretty well sideways. We're definitely sideways. We have the purple semaphore on the left, and this is a corrective pattern. We haven't quite made it down below the tunnel. We like to see corrections moving down below the tunnel before the next liftoff. We haven't seen that yet. In the daily chart, the wave is below the tunnel, so it's just not ready to make its moves yet. It's not ready. We want to see the wave to cross back above the tunnel, and we want to be in positive territory. Looking at ExxonMobil Corp, same sort of pattern, sideways consolidation on the weekly chart. Again, we didn't quite make it to the tunnel here. And on the daily chart, the wave is still below the tunnel. We did come off the lows, come off the bottoms, and hit the tunnel, and we backed off again. But we do want to see the wave crossing back over the tunnel before we can see some real progress in this. So we're still in a consolidation phase. Moving on to the financials, up 3.67% year to date. Biggest holding is Berkshire Hathaway, followed by JP Morgan, my alma mater. That's where I worked in New York as a professional trader for 14 years actually. Visa, MasterCard, Bank of America, Wells Fargo, etc. So let's have a look at the financials. The financials have done really well, and you can see the different pattern in the financials. Yes, on the left, on the weekly chart, we did consolidate for a while, and then finally we took out these highs and we started to move higher, and the wave is comfortably pointed up, and we can see that on the daily chart where we are above the wave and the wave is above the tunnel. So this is a bullish scenario. So it's a buy on dip scenario. It's a buy on dip until we're told otherwise. And the first indication would be if we start to trade below the wave and into the tunnel. But for now, it's buy on dip. Looking at Berkshire Hathaway, oh, this is a beautiful pattern. On the left, on the weekly chart, this is gorgeous, where the wave is comfortably above the tunnel. And every time the market dips down into the wave, it bounces. Dips down, it bounces. So beautiful, and beautiful on the daily as well. So this is a buy on dip scenario. Wouldn't really buy it up here because we're stretched. The market is stretched. We need some kind of a pullback, some kind of correction. XLV Healthcare up 4.11% year to date. Biggest holding is LLY, Eli Lilly. United Health Group is next. Johnson & Johnson, Merck & Company, etc. This is also beautiful. We had a nice sideways consolidation. We came down to below the tunnel, which is what we like before blast off, and we blasted off. And we can see this on the daily. The wave crossed above the tunnel, and every time the market came down into the wave, it was buyable. So very, very nice pattern. And then looking at LLY, weekly chart is just gorgeous. The wave has been above the tunnel, and every time the market comes down into the wave, really hasn't. It comes below the filter, really not into the wave, but it's buyable. And you can see that on the daily, every time the market comes into the wave, it's buyable. So we've accelerated higher. We need to see some kind of retracement now. I'm just teaching you how to read the market map. The industrials, XLI, up 1.39% year to date. Biggest holding is Caterpillar, followed by Union Pacific Corp, General Electric, Uber Technologies, RTX, Honeywell, Boeing, etc. This is the chart of XLI. Again, not so bad. The wave is above the tunnel on the weekly, and every time we came down, in this case, we had steeper corrections into the tunnel and then blast off. And on the right, on the daily, we had a nice three-wave correction. Corrections usually appear in threes into the wave and then blast off. Wait for corrections before buying this again. And the biggest holding, Caterpillar. Oh, look at this red candle, reversal candle. Yeah, we had a steep move up and the market didn't like that and it pulled back. Like nobody wants to buy it when the market is so stretched like this. But again, beautiful, beautiful patterns by the dips. XLB Materials down 2.86% year to date. Lynn, Sherwin-Williams, Freeport-McMoran, Air Products and Chemicals. These are the biggest holdings of the ETF. The market is still sideways. We can see that because the wave, even though it's above the tunnel on the weekly chart, it's flat and it's parallel to the tunnel, so it's flat. So we are in a sideways market, and the way you trade sideways markets is you buy the dips, you take profits on the rallies. We haven't taken out these highs yet. Same here on the daily chart. We did make a new high on the weekly, which presents as a new high, and then what happens? We had a correction down into the wave. Let's see what happens with this one. But we definitely were not stretched to the upside. This could be buyable at these levels or slightly lower. Looking at the biggest holding, Lynn, same kind of pattern. On the left, we have a very nice uptrend on the weekly, and on the right is the daily. We are very close to a buyable level here. This is very nice. We didn't want to buy up here, and the market has been trading sideways, and we made one more push down to the tunnel. Maybe we come down a little bit more. This could be buyable. And we have real estate down 4.37% year to date. XLRE, these are the biggest holdings. Let's have a look at the chart. So you can see that the market is down. On the left, the wave is below the tunnel, so that's bearish. On the right, the wave is above the tunnel, but price is coming down to the tunnel now. We need, for this to get going, we need to the wave to cross back above the tunnel on the weekly. That's what we need. Looking at the biggest holding, PLD, same sort of pattern. On the daily on the right, we're in corrective mode. So, and we would like the wave to be above the tunnel on the weekly chart. XLK Technology up 5.07% for the year. Biggest holdings, Microsoft, followed by Apple, Nvidia, Broadcom, Adobe, Advanced Micro Devices, Salesforce, etc. You can see that this is bullish. The wave is above the tunnel on the left. The wave is above the tunnel on the right on the daily chart. And we had a nice correction into the wave on the daily, and that's where the market started to buy it again. Yeah, we have to watch very, very closely because we are still stretched on the weekly chart. You see, we haven't really retraced down to a buyable level. Looking at the biggest holding, Microsoft, yeah, very bullish. Wave above the tunnel on the weekly chart, wave above the tunnel on the daily chart. All dips are buyable on Microsoft. And finally, looking at utilities, this is the last one that we're going to look at, down 2.91% for the year to date. Biggest holdings, NextEra Energy, followed by Southern, Duke, Sempra, Constellation Energy, etc. These are all of the utilities. The patterns indicate why it would be down for the year. On the weekly, the wave is below the tunnel or it's sideways with the tunnel, so we're in consolidation mode. On the right, the wave is also below the tunnel, so corrective mode. We need to get some juice in utilities, we need the wave to cross back above the tunnel. And looking at the biggest holding, NEE, wave is below the tunnel on both. So I'm not interested until the wave goes above the tunnel and then we see some strength in this stock. The good news is we can scan for these setups, and we have our Elite Scanner tool on TradeStation, NinjaTrader, MotiveWave, and MT4, and we have the indicator suite on Wealth Charts. So the indicator suite is on all of these platforms plus Wealth Charts, and the scanner, we have a very sophisticated scanner on these 4 trading platforms. I'm just going to show you one example from our scanner. This scanner is on TradeStation. The top one is Chevron. That's one of the energy charts that we looked at. And the ready is 3 candles ago. The signal is 2 candles ago. I'm going to show you this chart. We also have our trend line breakout system. So we have trend line breaks. The royal yellow is 1, the noble red is 4 on Chevron, CVX. So let me show you what I'm talking about on the chart. It's very, very interesting. We have the weekly chart on the left where this triggered. So we have the green arrow, which shows this is our ABC correction down below the tunnel. This popped up on our scanner. This looks promising. And then the daily chart shows the trend line breaks moving above, and the wave is pointed up. So what I would like to see is I would like to see the wave to continue to be pointed up, but we can always go down to a smaller time frame, and looking at the 60-minute, we see that the wave has crossed above the tunnel. So I would say that pullbacks are buyable. If you're interested in trying out our indicator suite and our scanner tools, you can do so for a low first month price. The indicator suite and scanners are on MT4, TradeStation, MotiveWave, and NinjaTrader. You can select which one you want to try out. And the indicator suite is on Wealth Charts. You also get a lot of education with us. You will understand how the markets trade in cycles and use our proprietary combination of cycle high and low indicators with momentum indicators to warn of market tops and bottoms. Works with stocks, futures, ETFs, Forex, and cryptocurrencies. Works for day swing and position trading. Find precise entry points for option strategies. Embrace this suite of professional tools to trade like a pro. And this is the website, wavytunnelpro.com/6-month-elite-tools. So we do hope you try out our tools. You will also get Elite Tool Scanner training and live training sessions on the key Wavy Tunnel Pro trade plans with a dedicated Discord channel. You will get a one-on-one coaching session with me and monthly office hours to discuss setups and answer questions. Thank you very much. It was a pleasure teaching you today. Please email me at jody@fxtradersedge.com if you have any questions, and I hope to see you trying out our Elite Scanner tools. Thank you. Bye.